Good morning everybody, welcome to today's Bitcoin technical analysis video. And if you could please like and subscribe this channel if you like the content, it will help this channel grow. I really appreciate it. Thank you very much. So let's get into today, and as we can see, still within this parallel channel that I've got my eye on, we have a bit of a movement this morning. We have a nice bounce of so far 3%. So that's quite a nice bounce off the bottom trend line of the channel. But what we want to look at is this about to pump? We're going to get the move up now. Are we going to get the pump? Or is it just going to be a fake out before we come down? And it's a little bit early to say right now, but we'll have a little look, see if we can, what we think of it. But the one thing I want to just look at is if you look at this parallel channel, once we hit this level, we got a strong rejection bounce. Once we hit this second time, strong rejection bounce. But that didn't happen on the third time. We got a bounce, and then we got a retest, and then we got this move that we're currently getting, which is still moving as we speak. So we need to be aware of that. Also down there, we do have this weekly level that we seem to be holding. We just need to bear in mind how many times we have tested this. So we've had the 1, 2, 3, 4, 5 times it's been touched, and possibly that one as well, 6. So, you know, if we do come back down, we have to think, will this hold? You know, it's been tested many times, but it has been very strong. You know what I mean? Like I say, 6 touches, that just shows the strength of that. So if let's think about what the general public are looking at, and I think everybody pretty much is got their eyes on, and I'll just take off that weekly a second, and I'll just get rid of the channel for a second. Let's just focus on this falling wedge pattern. Now, if you look on Twitter, everyone's got a picture on this on the charts. Everybody's looking at it. But we have to think a little bit outside the box. If 95% of traders lose money, and 95% of traders are watching this, then you'll probably find it won't trade like you'd expect, and it can be a trap. So what we first want to have a look at is this is breaking out. Let's just go into a 1 hour chart. We are breaking out of this falling wedge right now. So we want to know, is this it? Is this the time to jump in, and are we going to pump? Are we going to pump? Well, we need to look at the volume first and the open interest. So we just flick onto this chart, which shows us the open interest. And we can see that this move that we've had, this is a 1 hour chart, that at the moment, this move is not people opening new long positions. You see the red candles down here, this is the open interest. This is showing that this is people exiting the market. So at the minute, if it does keep going up and keeping up, and people do keep exiting the market, we can call that a short squeeze. And then you will start to get the buyers in. But at the moment, it's not new buyers coming into the market. It's people selling their positions, and it's pushing the market up. So at the minute, caution is needed. Caution is needed right now, because that is a lot of people exiting positions. Doesn't mean to say it can't keep going, and if we start to gather momentum, then we can get what we call a short squeeze. And then what we would have is everybody that's been shorting down at these lows, thinking we're going to break down, wanting 24k, where we're going to just liquidate them all and we're just going to push and push and push. That's one scenario we can have. So we need to be cautious. I would never trade a breakout, so I'm not interested in taking a long because we're breaking out here. You know, you need to be taking positions on support levels. So this is support level, support level, support level. Yeah, your probabilities are much higher if you're going to take trades on a support level rather than a breakout. Because what you don't want to do is think, oh, look at that, we're breaking out of this falling wedge. This is so bullish. We're going to go up to 42,000, whatever. And then what happens is you take your long position here, only for it to do that. So be very careful with that. So let's have a look at what resistances we are going to come into on this rise. And if I just open up let's take it onto a 4-hour chart a second. Now this is the fixed range tool, taking it from pretty much the beginning of December. Shown as the value area high, the point of control in the red, and the value area low. So what we do need, if this is going to move up, and we do indeed get a short squeeze going, then this point of control is the first thing we need to flip. Now we have been rejected before. This is the first sign of some strength. If we can come back, test it and hold it, then that would show the first sign of strength. So we need to keep our eyes on that. And then if we just put a Fibonacci chart retracement tool from the top of this downward falling wedge to the bottom, and that will give well, we've got the point of control. These Fibonacci, we might get some resistances up at the 0.5. We would then be looking to see, if we do get the move up, what the reaction is in the golden pocket. There will be some liquidity because you can see that it's been respected up there, so there will be liquidity. So what we would have to be aware of is that move up there, and do we come back down, or do we have a little reaction and push through? So it's level to level. Find out our levels, see where the resistance is, see where the support is, see the reaction. And as you can see, we are getting a little reaction right now off this point of control that we was talking about on the big range that we do have, which you would expect. You know, it is a big resistance level, so you'd expect some resistance there. And then just gonna go back out a second. And if you've watched any of my other chat videos, we do have some liquidity down below, down here, that we've not taken out, which is why in an ideal situation I'd like that to have been taken before we do get any kind of move, but we do seem to be making a move as we speak without that liquidity, so that would just be something to think about, that this might not be the move that's going to be sustainable. Put that channel back on. We also have to think about the amount of people that are also now looking at this channel and are expecting a breakdown. If it breaks, then we're going to go much lower. But we have to think outside the box a little bit, and we have to kind of do what 95% of the market are not, and that's why I like the liquidity to be taken. Maybe bounce off this 786 Fibonacci level before we get a move up. Might happen, might not. I would have liked that before any move up. But having said that, what we might do is we could get this move up and we could dump. So not bullish, I'm not bearish, I'm very neutral, and we're just going to trade what the chart gives us. And if we just put the trend lines on the channel again, sorry, on the panel, on the falling wedge again, and we'll keep an eye on the open interest. Like we said, we have got people closing as opposed to people opening just for the minute, so you know, we don't. This is why you need to look at certain other things like the open interest, because if people see that, they just think, oh, it's bullish, we're going to break up. But then if you look a bit more why we've done that, then at the minute the open interest is not backing it up. So you need to think of the other factors as well. Well, that's it for today. I hope it helps you, and I get this. What am I doing here? 1 second. Yeah, I hope these daily updates do help you, and if it does help you, then please like and subscribe, and then I can start to bring more content and improve the videos as I go along. But thanks for watching for now, and I'll see you next time.